Thank you very much indeed. And as the moderator of the first panel session, I'm delighted to see that so many of you have returned after the coffee break. As Laura quite rightly said, this panel is entitled Investing in Africa in Times of Global Uncertainty. And you'll be delighted to hear we are going to conduct this panel in English, if only because my French is not up to it. I recall when I was the minister asking the Foreign Office to draft, whenever I went to Francophone Africa, a couple of paragraphs in my speaking in French. And whenever I finished my initial couple of paragraphs in French, there was always a spontaneous explosion of applause, which I was never quite sure whether it was because I tried to speak French or I'd actually stopped. I'm joined on this panel by a very distinguished group of panellists, and I'm going to ask them to introduce themselves in a moment. But this panel is very timely in that last week the Pan-African Trade Agreement went live, as was discussed earlier. There's some challenges, but there are significant opportunities across the continent. But as we're going to discuss, you need to focus your efforts and investments in certain key areas. And we shouldn't discuss Africa as a generic destination because it isn't. But we need to make sure that the accelerating FDI has the maximum impact to the benefit of the maximum number of Africans in terms of creation of sustainable jobs and improved governance, etc. So before I get into the detail of it, I'm just going to ask my panellists to introduce themselves, starting with Christopher, who's immediately on my left.
Thank you. Good morning. Christopher Markus. I'm Managing Director and Head of Emerging Markets at MUFG. MUFG is Japan's largest bank, the largest non-state-owned bank in the world, and we look to be the largest provider of debt finance in Africa. Thank you.
Good morning. My name is Abebe Aemro Selassie, and I'm a Director of the African Department of the IMF.
Good morning. I'm Emma Wade-Smith. I'm Her Majesty's Trade Commissioner for Africa, so looking at how we can increase the value of trade and investment between the African continent and the UK.
Good morning, everybody. I'm César Pérez. I am the Chief Investment Officer of Banque Pictet, which is a private bank, Swiss private bank owned. We overlook more than 250 billion of our clients worldwide, and we try to invest the money and advise them. And in navigating these uncertain times where you're so far away from a tweet that changes everything.
Yeah, good morning. My name is Markus Thill. I'm the president of the Bosch group for the African continent. I mean, Bosch is probably very well known by everyone, but what is possibly not so well known that we are in the meantime present in 13 countries in Africa with own subsidiaries. We have more than 30 subsidiaries on the African continent right now, more than 2,000 people with roughly 40% local value add. That's always my estimate. So we also have manufacturing and service in Africa. And we are there with all of our industry sectors. So mobility, which is in particular automotive, in industry, which is hydraulics, pneumatics, for example, for hydro dams, consumer goods, which is your fridges and the power tools, and last but not least, security technology, also building and energy technology.
Thank you. Abebe, can I start with you? In the context of this global uncertainty that we've been talking about, how can, from the IMF perspective, how can Africa best interact with the global economy?
Big question. So I would make a few points here. I think the first point is the point you started with, is tremendous heterogeneity in the region, and I would in particular look to, I mean, assuming what we're talking about is a global economy slowing down as a result of the global tensions around trade that we're seeing, I would look to three broad channels through which the region is likely to be affected. I think first and foremost, of course, is the real sector channel, so the real trade link. So if there is a slowdown in the global economy, I think we will see the countries that are more integrated into the global economy from the region, Morocco, South Africa, a number of the MENA countries up north, maybe Kenya, they will be impacted significantly. I think so. The trade channel will be impacting. I would look for the degree of trade integration. Second important channel will be commodity prices. again, this is an important point about the heterogeneity of Africa. So if commodity prices were to be impacted because Chinese demand declines or global economy more generally slows, I think we will see, of course, the commodity exporter countries being impacted. But by the same token, that tends to have a positive impact in the commodity importing countries. So if you take oil, there's 8 oil exporting countries. In sub-Saharan Africa, 37 oil importing countries. So, they will have a positive terms of trade benefit. So again, even these channels that we're talking about, they could end up having positive impacts, even though in aggregate for the region they may be small. And then last but not least, my sense would be if there's a global economic slowdown, the prospects for further monetary easing will go up, or the search for yield will go up, and I think that will end up pushing even more capital. There will be even more demand for African assets bearing somewhat higher interest. This, I think, in broad terms, is how I see things shaping up in the coming months.
César, thank you. César, can I turn to you next? From where you sit as a chief investment officer, where do you see, in this context of the global uncertainty, Africa sitting as a potential investment destination?
I fully agree with Abebe. The world is slowing, so it's what I call globalization. And the market will pay a premium for wherever we can find growth. And Africa offers that opportunity. But as an investor, I asked for 2 things. The first one, given this global uncertainty, is political stability and regulatory framework where I can invest. I need to be aligned as an investor to get that extra return in any investment I make. In Africa, in some cases, 54 countries, it's not that easy to get a clear picture. So the best ways to get access to Africa are twofold. One, either you invest in companies in Europe or around the world that have their foot in Africa, and I get a growth through that, call it Portuguese banks that invest in some African countries, auto companies that invest in, there's different ways. That's the safest way. Or alternatively, through private equity, where my interests are aligned, and I get my shareholder return, I can get access to that growth that I can access in Africa, and I'm willing to pay a premium for that. Why? Because some of the listed companies, state-owned enterprise companies listed in Africa, are not yet run for shareholder value. When they do, it will be much easier, it will be much more relevant, and we global investors will be able to allocate significantly much more money of our pocket of investment to Africa.
Thank you. Markus, can I turn to you next? Has the global uncertainty reduced Bosch's appetite for Africa? And where do you see Africa fitting in your global corporate context?
Bosch usually takes a long-term view. I mean, more than half of our balance sheet is equity, so in that sense we are independent. We are mostly, I would say, even practically completely involved in the private sector, so we have not many public clients, so whether oil price is going down or up, we are more looking at the emerging middle class, which is booming or will continue to boom, hopefully over the next decades in Africa. So whether now there's a little bit of a glitch in the global economy this year, next year, 3 years' time, that does not move the needle for us in any decision on continuing investing in Africa.
Yeah. Abebe, you want to just come in quickly?
I think, one thing I would underscore is I think Africa is very much a medium to long-term play in terms of investment opportunities. Just one number I want to put on the table. By 2030, 2035, half of the annual increase in the global labor force will be not even Africa, but sub-Saharan Africa. So half of all investment demand, half of all consumption demand, incremental demand is going to be happening in Africa, and we're already seeing the early stages of that. But I would just underscore how global the implications of what's happening in Africa in terms of demographic trends are and how those are going to be translating into huge, huge consumption and investment opportunities. I mean, the market size we're going to be looking at in Africa 10, 15 years from now is going to be multiple the size of what we have now.
Thank you. Christopher, in this context of the global uncertainty, is that changing the dynamic of where your clients are focusing geographically in Africa, or are there other factors at play as well?
I think, Mark, a couple things. I think we're, as a debt provider, we're a good litmus test as to where clients go, because we ride across the continent with clients, Japanese, of course, but frankly, clients from around the globe. And what's striking is, and it's even yesterday, it occurred to me, the diversity of the composition of corporates that we're getting requests from. Not just the large names that you would expect, of which Bosch is one, but including, there was a company from Poland yesterday that made an inquiry. And next week, there's a Polish-African investment conference in Warsaw. So you see there's a remarkable spread of potential partners for the continent. And remember, we are mostly less corporate equity, but more heavy asset creation supporters. Now, so in addition to the diversity of national character, across the continent, what struck me also, and this is not where I thought the bank would be 2 years ago, where a lot of the investments have been in East Africa, the Japanese, conservative as they are, very comfortable in the EAC, a lot of English-speaking familiar dynamics. I'd say today, a lot of the demand and most of the interesting dynamic activity is coming from West Africa, and French West Africa in particular. I find the government counterparts are extremely engaged, younger generation at the technocrat level, really eager to move ahead. Currency stability probably, of course, aids that, but I think it's more the dynamic tone in that part of the continent that's helping us move there.
Thank you. Emma, often one of the sort of overarching concerns of this global uncertainty is the US-China trade war. But of course, Brexit is creating a degree of uncertainty as well. And I think it'd be very helpful just to understand from your perspective what impact the Brexit uncertainty is having on UK commercial relationship with Africa, and what can Africa do to avoid being negatively impacted by potential Brexit?
Thanks. So I think there were a couple of different angles to this. So one is around sort of the trade and investment promotion side of our relationship, and the other is actually around the trading arrangements that underpin that. So in terms of the trade and investment promotion work, I mean, what I've seen over the last 2 or 3 years actually is an increasing amount of interest from UK businesses who are looking at Africa, seeing this economic growth, seeing the population growth, and really exciting consumer markets, and leaning into that, and really sort of looking more at those opportunities and looking to the UK government to help navigate that. So, you know, our phones are ringing off the hook. Our single point of email inquiry is fuller than ever, as we're seeing more UK companies start to think, actually, what are the alternative markets? I think some of that is Brexit inspired, and some of that is actually just a natural response to what we're seeing happen in Africa. And as part of that, as we're seeing sort of the diversification of more economies in Africa, we're seeing a greater complementarity, I think, between what UK businesses offer and what African markets are looking for. And I was in North Africa last week with Secretary of State, Dr. Liam Fox. And we just heard time and time again this strong demand for UK expertise, UK businesses to come and provide business partnerships, whether that's in financial and professional services, agri-tech, healthcare, education and skills, as well as your classics of extractives and infrastructure and so on. So I see a growing complementarity of our economies and a growing interest to take those opportunities up. I think the key thing, of course, with Brexit is the trading arrangements that sort of frame those business activities. And what we've been doing over the last couple of years is working really closely with governments across Africa to make sure that we have continuity of those trading arrangements. So, of course, as the UK is still a fully fledged member of the European Union, we are not allowed to enter into negotiations about future trade arrangements. But what we are allowed to do is have discussions about ensuring a transition of those arrangements so that we provide for continuity. So like-for-like replication of the trading arrangements that we currently have as an EU with a country or a group of countries, making sure that at that Brexit date, those trading arrangements remain the same. So in terms of, and then of course thinking, once we have left the European Union and we have control of our trading policy again, what can we do to take those discussions and understand how we can build an even stronger, freer, more open trading arrangement for the future? And in the course of those discussions, quite a lot has come out in terms of what countries across Africa want. In terms of the next generation of trading frameworks. So I think lots of interest around all of that, and I think the key thing, frankly, is kind of ensuring that there is that continuity, and then building from that to take up this exciting future.
César, did you want to jump in?
Yes, I think it's interesting because we live in a changing world, and I want to remark how much the world has changed with the rise of populism. And we've gone to a world where is America first, is Italy first, is UK first, is my country first. And I think that really has taken even a further step with the relationship between China and the US. And we are moving from a trade war to a tech war to an ideological world. What is at risk here is the business model that you offer to the rest of the world. There's an alternative to the democracies that the US has been pushing for many, many years. It's interesting because we are starting to see the first signs in which the US is asking their partners that they need to choose in 5G technology. And we've had cases in which the US ambassador in Germany is asking Germany to decide. And I think we're going to a world where people and countries will have to decide. And it's interesting because Africa's at the heart of it. Africa is the growth opportunity which is up there. And eventually, in some cases, and that's my question to the panelists, some of these countries will have to decide which side they take, because it's not getting any easier. From an investment point of view, I have to say that until now, central banks have been there to help us, to support us, to avoid accidents. There was too much debt, and we could not allow people going under. As we move forward, I believe the normal investment process, the famous distribution when you invest, has big fat tails. So I need to protect my clients' money when I invest of those potential accidents. So it's going to be very interesting which countries does what, and when we invest, make sure that you have that framework rightly protected, because we're going to more protectionist, not less, going forward.
Thank you. Christopher.
I was going to put I suppose, a continuingly positive spin on César's point, and also give Emma a compliment as well. What I see, these mercantile dynamics can be played out in a very constructive way for a number of African jurisdictions, because recall, notwithstanding the World Bank and the African Development Bank's large flows, the real heavy lifting is done by export credit agencies on the continent. I see UK, EF, all over the place. It would have been unimaginable 5 years ago. I mean, proactively engaging in French West Africa, everything from small renewable sponsors to very large construction projects where they go head-to-head with French companies that a decade ago would never have imagined to see UK competition. Now, it places a burden, as César has indicated, on African jurisdictions to play intelligently, to make selective use, to push and take advantage. And I'll give one last point from the Japanese side. The Japanese have been very comfortable, the big trading houses and engineering firms, to do EPC work across the continent. They're technical, they're very good, they deliver on time, they may be more expensive, but they do what they say. Some of the African jurisdictions, following, for example, the Ethiopian lead, are pushing for investment. They don't want them just to build and run away. And so well aware that the Japanese TCOD event is taking place in August, and there'll be big political signatures and MOUs. And they've said, if you want a signature from the Minister of Finance in Yokohama in August, you should probably find some investment capital in addition to signing the EPC contract that we know you want. So they're playing the game very well.
Thank you. Markus, then Abebe.
Yeah, I would like to comment on the topic both on what does global uncertainty mean for investments in Africa, as well as comment on how we see African markets going forward. And I profoundly believe, and here Alec Irvin is also here in this, ex-minister of Trade and Industry of South Africa, we're working on a Pan-African Auto Pact. And what I wanted to say is that with the global uncertainty, Africa needs to become more independent of the rest of the world. And that is only possible if Africa produces in Africa for Africa. So then we might need to less choose between America or China or anyone else. If we could model the African Union the same way that we have supply chains in NAFTA, or the same way we have automotive supply chains in the European Union, and we produce in Africa for Africa instead of Africa being the junkyard of the rest of the world in terms of the automotive sector, we could produce 5 million vehicles today in Africa for the African consumer. And the money is there, the middle class is there. And African Exim Bank, I hope that in the July summit, that will be a big topic also in terms of industrializing Africa. The African Continental Free Trade Area could be one of these key levers to actually also deal with the global uncertainty.
Thank you. Abebe.
No, I'm not so certain that we are moving to a bipolar world. It wasn't so long ago. I mean, a couple of years ago, we were talking about a multipolar world. Now, of course, the last year or so, we're talking about a more bipolar world likely unfolding. But my sense is we will have more of a multi-issue alliances being formed. So, for African leaders, I think politically, there's going to be, if there is indeed this pressure for a bipolar choice between one side or the other, there will be kind of a reprise of the non-aligned movement, as it were. I'm aging myself, but when we had the Cold War, African countries, a lot of Asian countries, a lot of Latin American countries had a grouping called non-aligned countries. And I think my sense would be that politically, African countries are going to be finding it very, very difficult to choose one side or the other. If it's climate change type issue.
I'm not saying a full Cold War. I'm saying in specific areas, just the war, which is artificial intelligence, cybersecurity.
So I was going to come to that.
Yeah,
so in technology, I mean, mobile services, etc. Again, I think if you're Niger or you're going to be choosing depending on who your supplier is already, and of course who's going to be providing financing and what makes sense deal-wise. I doubt you're going to kind of change your systems.
I think you might be asked to. I'll give you an example. 5G technology, Huawei are the best in the world. Nokia and Ericsson can't compete. When you go to the coding, they found in the Huawei coding notes from Danish programmers on there. So they copy-paste stuff. So given the potential implication for security that these might have, 5G technology, I think in some areas, not in all, I don't think in everything, I think you might be asked to support. That's what I would believe.
Who knows? But my sense is I think we will, there will be definitely issues and tensions around some areas, but I think also there will be other natural alliances. So if you take my own country, Ethiopia, for example, security issues, there's a strong alliance with the US about, in the Horn, the same, of course, in the Sahel with the US. But I think industrial integration is going to be more towards China. So I think you're going to see.
Thank you. There's enough in the China-US technology war for a 3-day conference in itself. Markus, can I just move the discussion on? Markus, can I ask you, obviously there's an increasing amount of welcome regional cooperation within Africa, not just the Pan-African trade, but the regional cooperation, reducing tariffs. Perhaps East Africa is further ahead than others at the moment, but it's definitely a significant momentum. What impact will that greater regional cooperation have on your business, and how do you see it panning out in the next few years?
The biggest, or the first criteria for us to invest somewhere is actually the size of the market. And today we have maybe 4 countries in Africa which are self-sustainable from our perspective, where we are active, and that's Egypt, Nigeria, South Africa, and possibly Algeria. And so there's these 5 countries where we could also imagine that we would have plants manufacturing for the local demand. Practically all the other countries are too small to sustain on their own manufacturing plant. And if we want to move further away than just exporting from wherever in the world to Africa, but also really creating local value add, the only choice that Africa really has is creating at least local sub-regions. I mean, it could be 4 or 5, and that's what COMESA is about, that's what ECOWAS is about, that's what SADC is about. But again, if we are, and there are certain of in our industry sectors, just talking about power tools, we need at least probably 500,000 tools that we sell per year in a certain market to self-sustain a plant. And we don't even sell 500,000 of these power tools today on the whole continent. So to sustain a power tools plant somewhere, we need an African continental free trade area. If we're talking about the automotive industry, one could imagine, as I just mentioned, and I think many of our customers, the OEMs, would agree, Africa would be good for 5 million vehicles right now. If we want a Bosch plant somewhere, we need, whether it's now car multimedia or even if it's powertrain, we need at least 1 million vehicles to a local demand to sustain a plant. And today in South Africa, we have 500,000, 600,000 vehicles which are produced. Morocco is now moving towards the 600,000. So right now, for us, the answer is relatively easy. We first need to create these integrated markets. And for that, I would hope that, for example, within Pan-African Auto Pact, there could be an example of how to create these markets. For us, the size of the market is the first, and I would say even the only criteria. All the other things, financing, duties, logistics, all that can be solved. I mean, sometimes it's more expensive, sometimes it's less expensive. But the first thing that we always need to talk about is there a market? And for the foreseeable future, the next 5 or 10 years, I personally believe in many of the areas that Bosch is in, but also many other companies are in, will only have large enough markets if there's regional collaboration.
César, from your perspective, from an investment perspective, do you agree with that? Or do you take a slightly different perspective?
I take it's interesting because the other big characteristics in the world we live in is that rates are going to be low for a long time. Why? Because the transmission mechanism between, especially in the developed market, between wage growth and inflation is broken. So as investors, I need to go the extra mile to get my yield, my return. But I'm willing to invest a lot of money in Africa. We heard this morning Togo doing the right thing in terms of regulatory framework, in investments and infrastructure. I'm willing to do it for the right yield in the country that gave me that framework. So I don't go just for growth. I'll give you an example. One of the countries that are very positive in the rest of the world is India. Why? Because we had a new president who's won the elections that I know is going to be investment friendly. So in any country that I want to go, I need to know that I'm going to get my return and I'm going to get my yield. And I'll be out there supporting as much as possible to build infrastructures which are needed, to invest anywhere so the country can grow and give me that potential. But I don't just go for population because that on its own, look, I'll give you a negative example. One of the best countries on the world, they even got Messi, although I know that football player, was Argentina. And Argentina, I don't have any legal protection. So as an investor, I'm not going to go unless I have that safety net that allows me to tell to my clients, you are protected, I have a nice framework. And I think as the world evolves, that becomes significantly much more important than in the past. Significantly.
Christopher, can I ask you, does the regional cooperation and regional integration taking place in Africa, has it impacted or is it beginning to impact on your decision-making and your client focus in terms of investing and lending?
It does, and I mean, certainly, as Markus suggested, talking about the automobile industry, and certainly for the Japanese part of our client base, the Japanese like scale. They're good at scaled operations, not only in automotive, but all the supply chains, all that technology that allows them to be efficient operates particularly well in the context, of course, of regional trade areas. But away from the obvious large jurisdictions that Markus referenced, or even the EAC that's familiar, I've found even in West Africa, back to my point about Francophone West Africa serving up interesting examples, particularly with Nigeria integrated into ECOWAS. It's an interesting example of a Japanese company that is producing tomatoes, everything from the plantation to the canning, and it's a company called Kagome. It's Japan's largest tomato canning company. And they chose Senegal as a very attractive destination to create from the ground up an entirely integrated system, including distributing to Nigeria. And so it's only because of the existence of ECOWAS, and it's a little bit to the counter trend that only in the large population areas can we do large integrated manufacturing activities. But even selectively, there's a range of new opportunities. I see equally in Francophone West Africa in the cotton sector. Again, think of Benin, Burkina, two of the largest cotton producers on the continent. There again, I see textile manufacturers coming in, spinning operations. Some of that hopefully will be sent all the way to the United States, but a lot of it will be sold within the ECOWAS region. So these are smaller scale operations than 600,000 vehicles in Morocco, to be sure, with 30 or 40 or 50 supply chain factories linked in. But selectively, it's getting you also towards the same goal.
Thank you. Emma, the Prime Minister in her last visit to Africa was very ambitious about the UK-Africa investment relationship. I think she said you wanted to be the largest G7 investor by 2022. Is the regional cooperation integration having a positive impact on that ambition? And in addition to that, how realistic is that ambition? And what are you and your team doing to achieve it?
Thank you. Just to roll back a second and think, so a lot of what we've been hearing here around sort of non-tariff barriers, and the UK government's been doing a lot of work across Africa to see how we can address some of those to facilitate greater intra-African trade and trade between Africa and the rest of the world. And so it's around, how do you reduce the time it takes to move goods across borders and across countries? How do you reduce the cost of that in order so that companies, when they're thinking about investments and exports, are able to do a cost comparison. How much is this going to cost me to set up a manufacturing base here and then ship my goods around the continent? So things like programs like Trademark East Africa have really helped to sort of drive down the cost and the time it takes to move products through East Africa, for example. And then we're also looking at how do we invest in creating manufacturing bases in countries like Ethiopia. So there's plenty of work going on to really understand actually what is it that is constraining the growth of business and investments and exports. So I just wanted to sort of flag that because I think that's really useful in the context of how do we support the sustainable long-term economic growth that we want to see in Africa. As part of that, as you say, I have a stretch target around UK investment into Africa. We're currently the second or the third largest foreign investor in the continent and the largest in markets such as South Africa and Kenya and so on. And we really want to build that base from £45 billion of investment stock over the years ahead. And how are we going to do that? So I think there's a huge amount of work going on, as I say, to really understand what are the constraints and how do we tackle those. Questions around corporate governance and questions around risk perception and risk appetite amongst UK investors. So how do we really use the power of the City of London to crowd in further investment? And how do we use government institutions like CDC to bring those billions of pounds in, again, to sort of de-risk investment for the private sector and demonstrate that you can invest successfully in markets and sectors that perhaps are a little bit more unusual. So we think, so as part of that, we're hosting in this extraordinary city of London in January a UK Africa Investment Summit. So bringing together governments and business and international organisations to really showcase actually the investment that's already happening to prove that it can work, because nothing encourages success like success. So let's showcase what's already happening and let's provide a platform so that investment promotion agencies and governments from across Africa can really say, like, here's our list of investment opportunities. What are you waiting for?
Thank you. Abebe, everybody seems to be positive about, by and large positive about the investment impact of regional cooperation and integration. Is there more that you and your colleagues can do to help facilitate and accelerate that for the benefit of African development and future, both foreign direct investment coming in, but also intra-African investment and trade?
So a couple of points on this. First and foremost, I just want to make the point that, in many ways, the AFCTA is countries and leaders, waking up and following what has already been happening on the ground in the region. I think, going back to the mid-2000s, you saw companies operating in Kenya, Uganda, really considering, Kenya, Uganda, Tanzania as a single market. The amount of trade, informal, that takes place between countries is just phenomenal. So the creation of the AFCFTA is, in a way, responding to reality on the ground and making it continent-wide. So this stuff has been going on for quite a while as economies have been growing. I just want to make that first point. Second, it is indeed the case. I think, we've done quite a bit of work on what the AFCFTA will mean. 2 points in particular that I would highlight. I think the first is, it will increase trade by about 16%, intra-Africa trade, once it's been implemented, which is non-trivial. Over the last, intra-Africa trade has gone up from about 10% to about almost 22-23% of intra-Africa trade now. So it has been increasing significantly over the last 10-15 years, and so we're looking at a further increase from there. But these trade models always don't show kind of the more dynamic, effects that it's unleashing. And what I'm more excited about is, indeed, with non-tariff barriers being lowered, the scope there is for particularly manufacturing type trade to expand. When African countries now trade with the rest of the world, it tends to be commodities. It tends to be, marginally a bit more processed goods. But when they trade with each other, it's actually more manufactured goods. So the dream that leaders have of promoting structural transformation, industrialization, will only be possible with more intra-Africa trade. So, again, another example, Uganda, when it trades with the UK, it exports tea, coffee, etc. When it's trading with South Sudan, it's exporting bottled water, roofing materials, processed flour, cooking oil. The same, of course, to Rwanda, DRC, etc. So, the more dynamic effects of the free trade area should not be underestimated in terms of how much it can unleash growth going forward. But, subject to, of course, addressing non-tariff barriers and other infrastructure-type barriers which need to be addressed.
Thank you. Emma.
And if I may, that's one of the issues that has come up time and time again as we've been having the discussions around the transition of economic partnership agreements, is intense frustration, which I think we completely understand, that you can export your commodities with zero tariffs, but if you try to add any value at all, then we're going to slap some tariffs on you. And what we have said is we want to be able to move to a world where we can can address that and support the value added, the beneficiation of raw materials in Africa to really encourage and inspire more growth.
César, yes.
What was interesting, and maybe it's a very interesting point, and that's why Africa needs to think about the next leg. The other thing which is interestingly happening with all the trade conflicts is that there's a big discrepancy between the manufacturing and the service sector. So the manufacturing sector worldwide is almost in recession. The autos, the auto industry, like global trade is decelerating. It's the service sector which is keeping alive the economy worldwide. So I think Africa has the growth potential to develop the service sector and the value-added sector in the manufacturing to have that growth that the rest of the world doesn't have and with that investment opportunity for many, many years to come.
What's interesting on that is actually the non-tariff barriers associated with services are way higher than they are on goods, really? And decades behind the curve, because we just haven't engaged in those kinds of discussions on services in the way that we have on goods.
Services are more local rather than you don't export them that much, apart from financial services.
Untradeable.
Do you want to come in? Or?
No.
Can I just, before I go to the floor for questions, can I just sort of develop one other theme? Clearly from an investment perspective, governance and the direction of travel on governance is a very important consideration when making investment considerations. And I think it'd be very helpful for everybody just to get the panel's perspective on whether and how important a criteria that is when you're looking at operating in specific markets. I'll come to the investors perhaps in a minute. Markus, could I ask you, do you look at governance when you're deciding to go into a particular market, and if so, what sort of impact does that have on your decision making?
I mean, we are more than 130 years old, and I think already before First World War, there was practically no country on earth where we didn't operate. So via distributors or elsewhere, and then there's been world wars in between, and we still remain in these countries. So we try to be a good corporate citizen wherever we are operating, so we have our own rules in that sense. It is obviously easier if there is good corporate governance, or if there's also the regulatory framework which provides more comfort to companies. But as I said, I mean, our biggest concern is usually the size of the markets. And what I very often regret, and I talk to also European governments about this, is this compact with Africa of the G20. It is focusing, unfortunately, mostly right now on very small countries. And the biggest opportunity for us as a company is very often, as I mentioned, in the larger countries. Obviously, we could also take Senegal as a manufacturing base, but we need then Nigeria or ECOWAS to make it work. And if we would really be thinking, if the market is big enough, whether we would then put a plant into Senegal, Ghana, Togo, wherever in West Africa, there's a list of probably 200 criteria that we would look at. I mean, logistics, these costs, that costs, and the government regulatory framework is one of these criteria. I mean, could be a knockout criteria, but so far I would always say that we've always found a workaround. So except if, like in Algeria, we're not allowed to own our own subsidiary. So that's why we're not investing in Algeria. But so that's rather than a no-go, but because that's the law. Anything else, somehow, I always say a challenge also is the other half of the coin is the opportunity. So I would always then look at the glass being half full and not half empty. There's always a solution to any challenge, except like in Algeria, they just don't allow us to operate.
Emma, can I ask you that same question, but perhaps you could respond in the context of the work that UKF are doing as well, and whether governance plays a role in that financial support mechanism. And it may just be sensible just to explain to the people what UKF actually does and what it's there to provide support for as well.
Excellent. I will get onto that, but I've got a specific example, I think, around the corporate governance question. So the London Stock Exchange Group has an initiative called Companies to Inspire Africa, and it's done in conjunction with PwC and Asoko Insight. And what that produces is a directory of the fastest growing, most exciting companies across the African continent. And in that directory this year were over 300 really amazing companies. And that alone, frankly, if I was an investor, that alone would inspire me to go and take a look at Africa if I hadn't already got that message. But the reason I mention this is because of those 300 or so companies that made it to the final directory, there were thousands of equally fast-growing, exciting companies that are doing really good business in their countries of origin, but failed the corporate governance test when the due diligence was happening. So I think that is an important factor for an investor to be able to know that there are international standards of governance, that if I'm investing in that company, I will be confident that that's happening. So I just wanted to mention that. In terms of UK export finance, so the UK's export credit agency, 100 years old this year. It provides loan guarantees, et cetera, to enable deals to happen, to enable companies to sell, to enable buyers to be able to afford to buy, and to essentially de-risk some of that finance. The great thing about export finance is that they require a minimum of 20% of UK content, which I think makes it highly competitive in the world of export credit agencies. And what that also does is reflect the way that UK companies often do business internationally, which is in a consortium with a supply chain, looking for the best companies, providing the best service and goods, so that project works really well. So UK export finance has a fairly large risk appetite across Africa, just shy of £30 billion worth of risk appetite when you add it all together. And it's only 10% utilised across the continent. So if that was a business, we would probably say that's a failing business. But actually the good news is that that's way more utilised today than it was 2 or 3 years ago, and we're seeing new companies new markets being activated through UK export finance. So, for example, in Angola, over the last few months, we've seen the first ever UK export finance projects. We've got our Prime Minister's trade envoy, Baroness Northover, there, who should take some of the credit personally for really helping to drive that. And that is really helping to enable more UK companies to go and do business in Africa.
Thank you. Christopher.
So just an add-on, as a bank, we're naturally a nerve ending for all of these concerns about governance, but I find that even in situations, for example, where we act as an intermediary, where we're not financing, it's not credit risk, but reputation risk, naturally, that's at the heart of the issue. What I've found to be true is that our government and state-owned enterprise partners are increasingly sensitive to work with us, not just on the question of use of proceeds, but even flow of funds mechanisms that are increasingly transparent and really often quite invasive. But they've understood that the kind of revealed process to ensure that the investor knows, this is when we are selling directly to institutional investors, they know exactly where the money is going to the best of our ability. So there's traceability, as it were, for appropriateness and suitability. But as they say, the government's understanding, not taking it as a comment on the internal governance process, it's simply a revelation in the state of the world these days, and they're facilitating investment by a raft of new investors who've never worked in Africa before and need this kind of careful comfort. So we're getting better.
César, presumably you, before you do huge due diligence, points that Christopher quite rightly made about reputational damage. I mean, what impact does governance have on your investment decision-making?
Okay. First of all, to invest in a country first, regulatory framework matters first. Legal framework comes second. Governance, it matters to do direct investment in companies, especially if I'm tying up for a lot. I think the other big trend, which I see happening more and more and more, and we as a bank are embracing at the hardest level, is ESG. The question mark is, what is ESG? But the G is the one, to me, that proves the sustainability and you can prove that historically has added value to your investment for sure, which is governance. So we look at the governance, and that's why I said sometimes when investing in Africa, we go through private equity where our interests are aligned with the people investing there. So governance is one of the things that we do. And lastly, talking about the political stability. So that one only overrules the rest in the extreme cases. But I think regulatory is first, legal second, and governance third.
Abebe, can I just ask you to make a few comment on that? Because obviously the IMF's role is to, where it's appropriate, to assist with providing macroeconomic, responsible economic governance. But of course that sometimes fits alongside good political, or should always fit alongside good political governance, but doesn't necessarily. What's your sort of view as to what your role should be in the governance space?
So this is something actually we've always been involved in some level or another. I think if you look at fiscal policy, a non-trivial part of the work that we do, of course, is to try and strengthen public finance management institutions. So, we have quite a lot of capacity development work, which goes in towards creating structures and institutions which handle public resources appropriately. The same on the tax side, that you have transparent ways of doing taxes, ways of following up to make sure that there is not too much leakage in taxes that are being collected, etc. So we've always done the public finance management side, and increasingly now we are doing work to also minimize other ways of corruption. To minimize the scope of corruption. So a couple of things that we're doing, for example, right now is strengthening, of course, anti-money laundering and countering the financing of terrorism type legislation, helping banking systems implement regulatory standards which increase transparency of the flows that go through countries. So we've always done this technical work. And then, of course, last but not least, wherever we've encountered instances of corruption which have significant bearing on fiscal accounts, we've always, pushed for transparency. Forensic audits, for example, to try and understand what happened to the resources. A classic case is Mozambique. There were significant borrowed resources. The use to which they were put were not clear. We interrupted program engagement and pushed for an audit. I mean, this is something the government itself wanted to do, so we were on the same page. But many facets in which we are involved. I cannot stress enough, how important, given the scarce resources governments have at their for use. How important it is to make sure that resources are used to the most effective way possible. So anything, corruption, governance, malgovernance, misgovernance, of course, there are things that divert these scarce resources. So very important for country.
Markus, quickly.
Maybe just to add two elements to it. I'm now working in Africa for 5 years. No one has ever approached me to try to bribe me, nor have I obviously tried to bribe anyone else. And so for me, very often the topic about corruption, maybe again, we are practically not doing any government business maybe, but I could even imagine that in Europe, some governments might have issues in some projects with these type of things, so it's not an African issue. So for me, the whole corruption topic is a no issue, if I'm thinking about Africa. And in that sense, also corporate governance. What I rather see, and there we are, for example, helping also with the OECD, is there's a lot of fake products in Africa. And it's not that, it's again, my impression that necessarily the customs officers do not want to stop it. Very often they just don't know that this is fake. So what we are doing is actually in several countries in Africa training the customs officers to really look, this is now, is this a fake? Is it a real Bosch product? Is it really good thing, et cetera, et cetera? And my experience with many African governments or countries is irrespective of where they are on the corporate governance scale or corruption index, they are very open to learn. And I think as companies, it's also our duty to help doing clean business wherever we operate.
No, I agree absolutely. Governance is not just an African issue. It's absolutely right. Now, I've got time for a couple of quick questions from the floor to the panel. Ronnie, could we get a microphone to Sanjeev, who is in the corner down here? Sanjeev, would you mind just telling everybody who you are? Most people will know, but just in case.
Hi, my name is Sanjeev. I work for Africa Finance Corporation. I have a question for César, and one of the reasons is because you manage my pension funds. So. No, but I was particularly intrigued by one comment you made, which kind of resonated with me, and that is the me first syndrome, right? That each country is saying me first. Now that poses a very unique challenge for the continent, because on one side you have the me first syndrome, and the other hand, when it comes to major issues, be it immigration or labor policies, be it climate policies, be it asset allocation or capital allocation decisions, there is a seriously united front that the continent has to deal with. Equally, you have these isolated strategies coming from the greater powers, which is trying to push their own personal agendas. How do you advise African governments in future to actually manage this new challenge? Because it's almost as if another new barrier has been created for African investors not to get the capital that they require.
I think it's unfortunately, but I think and probably this is going to be a bit, we need leaders, worldwide leaders that think on the long-term benefit of that. And I think in the case of Africa, what I'm much more excited about is what you heard in the panel about the potential of Africa being even independent of the rest with the whole potential there is within the trade agreement that you can do within Africa. The question is that similar to the European Union, where we have so many vested interests in each one of them, is a very, very difficult task. And you need leaders that put the interest of the community first and the growth potential there, that rather than one. The other big thing, actually, which I believe in this world where we are going, like, you can get more the bigger you are. And that's interesting to see. I'm sad, I've lived in London for 17 years. I think Europe is stronger the more united we are and the more we are, rather than, I think Africa needs to learn from that. The question mark is that will the politicians will see through that or not? And I think it's, you'll get better deals, especially with Trump, the more you can sit down and say, sorry, I have all this that is a battle of equals. This famous trade of a deal that he keeps talking about, I push in first as much as possible and then I negotiate back. If you're in the other side of the table saying, sorry, I'm as big as you, then I think you can negotiate better. And it's interesting because he's trying to divide each one. I'm going for Germany for the auto industry. And supporting Salvini, I'm going to buy your bonds. No, Europe needs to be united. And same for Africa. Bigger, you're stronger. I believe so.
Christopher, do you want to come in quickly?
Yeah, and I don't need to tell Sanjeev who knows these things, but one of the things that struck me, and I made the comments earlier, is generationally, certainly at the level of ministries of finance, for example, I find a number of counterparts who are well aware of these tensions, aware of the balancing act that they play, and moreover, are not hindered by old-fashioned, let's say, reliance on Paris for any basic assumptions about support or what's in the best interest nationally. Even in countries that are vulnerable in some security aspects, Abebe made reference to the Sahel, yes, they will use American support as they need to for a raft of bigger issues, but on certain sector issues and energy, they will find different partners. They'll balance the Asians where they need to. So I find there's a high level of awareness and agility among a number of technocratic partners at government levels, so that this choice, it's a high political choice, of course, but on a practical level, with export credit and other elements that are made at their disposal, I think they played the game reasonably well.
If I can add, I think it's fascinating because in the world we live in, China has an advantage because Xi Jinping can sit down and say, if I don't get to an agreement that I like, I know that Trump will be there for long term. Well, he can take the 2030 visions, where do I want to go long term? And it's interesting because China is never been a country that goes out there and publicizes and really show face. And Xi Jinping did it. For the first time, said, I want a beautiful China, a clean China, and I want to be the leader in all this Vision 2030. And he has the time. And I'm going back to your leaders, and I'm talking about the ideological fight and who has the best business model of economy. I think the advantage that he has is that he can afford that. I don't care suffering. We already suffer in the past quite a lot. I will survive, and I can take the best decision for the country long term. And I don't think many politicians out there, given the political agenda and the votes that we have so often, can do that.
They say that sometimes is a weakness of democracy, but let's not open that box. I've got to draw the panel to a close. Can I, on behalf of all of you, thank the panellists for their intelligent, informed, dynamic and stimulating information. Thank you.